All right, good morning, everybody. Happy Monday, the 16th of December. We're about a week away from the big day, 16th. Yeah, Christmas Eve next Tuesday, right around the old corner. But all right, guys, good morning, happy Monday. As always, hope you all had a great weekend. Yeah, we'll jump in here. It's been a really good market as of late. So hoping all of you have taken advantage of it. We've had a really good end of September, October, November, December. In my room, some Apple trade, Bitcoin, Microsoft, Meta, a few more. And then on my end, as of Friday's close, this is my first six-figure month, which of course is a big milestone. But that being said, I can't go giving it back here in 2 weeks. That'd be a sin. But I did want to show y'all one trade. Now, I didn't send out this trade because as a good rule of thumb, I don't like holding things to earnings. It's you can take a name before earnings and you can look at the trend, the structure, the signals, the squeeze. It's a little bit of a coin flip. One thing I do think is good trading allows for aggressive trading. The better you trade, I think the more shots you can take. So we had a good trade on Apple, Google, etc., etc. What I did was going back about 2 weeks ago, took a decent chunk of that close profit, and I jumped in and I bought the 210 call on Broadcom for the January expiration. And to be honest, I'm kind of thinking, all right, let me jump in here, take half my typical size, maybe catch a pop into 190, 200 after earnings. If she's really strong, maybe pop in towards that 200. Then take that weekly squeeze, try to find a spot to buy more. All right, so I'm taking profit, and I'm putting on half of my typical size, thinking, all right, I'm going to buy more on a dip. And then, yeah, Broadcom says, hold my beer. How about a 25% pop for you? So on about 10 or 11,000 bucks of risk, that was about a $60,000 profit. Again, to be clear, not a posted trade, and I'm not going to do earnings trades as alerted trades. But the point of showing you that is, do your job where you should. Which for me means, all right, here's Apple in beautiful weekly uptrend, perfect weekly squeeze. No earnings 2-3 weeks around the corner. I've got to jump in. I've got to make money on that. Tesla in a 4-hour, etc. You take advantage of those kinds of things, and then you take a little profit. You go have a little fun. You get in the right market. That little bit of fun can turn to a lot more profit. So yeah, I wanted to get y'all up to speed there. And then for the folks in my room, we only got 2 open trades here. We are long the Bitcoin futures, which I like that trade above 100,000. What I'm trying to figure out here for Bitcoin is, you had the big breakout. They fired that big giant weekly squeeze. That all kicks off a really nice initial move to the upside. And then, from, we'll call it last, 2.5, 3 to 4 weeks, it's all been a little bit more choppy. Right? They'll dump it, they'll pop it, they'll dump it. What that choppiness has given us is a brand new daily squeeze. So I'm trying to figure out, can they take that daily squeeze and then try to get a push going into, 110,000, maybe a bit higher. If it's a little bit too early for that, they can't break it out. For my trade right now, what I wouldn't want to see is too much price action back under 100K. Now, back under 100K, I don't think anything changes. It's still bullish. You got a lot of buy signals. But for the immediate continuation, if they can't break it out today, tomorrow, this week, I would like to see them hold it above 100,000. All right, so we've got that, and then we have a bit of a lotto trade on Meta with a 650 call fly for this Friday, which of course implies, uh, we need to pop into 640, 650 ish. Do we get that this week? We shall find out. A little bit beyond that trade, I really like the 3-day squeeze. Um, and for that butterfly, I don't have on a lot of risk. The game plan would be if they can't get the push into 650 this week, any little bit of back and forth, any pullback that keeps price above 600, right? You don't want it back under that level. But any action, let me change the color of my pen here. Yeah, any flush, any little bit of back and forth that keeps price above previous resistance. I think you try to buy that, calling for the move into 650 from that 3-day squeeze. Could be this week, or they drop it a little bit, a little back and forth. Then they go in for it a little bit later down the road. But all right, that is it for open trades. And then let me grab the sheet here. All right, so for now, this is it's just an observation, and it could be one of those things where doesn't really matter until it matters. But if you think of the action we're getting in, your Broadcoms, your Netflixes, Microsofts, Metas, Googles, Teslas, based on those 4 or 5 things, you would think we're in a really strong market. Like, holy crap, Broadcom's up 25%, Tesla's up 5 or 6% every day. Things are really bullish, right? When we look at the sheet here and rank things, from strongest to weakest, it paints a much different picture. Paints a picture of, well, you're not really in a really strong market. You're in a market where 5 or 10 names are strong, and it just so happens they're the most important 5 or 10 names in the market. Right? It's the 4 or 5 things that make up 20, 30, 40% of the S&Ps. They make up a huge chunk of the QQQ. For me, it's my favorite names. Right? Broadcom, Tesla, Google, Apple, Amazon, Meta, Netflix. But if y'all look up here at market strength, right, we got the overall, we got the indexes, Big 10. Like Big 10 is these guys, and then the sectors. 100% would be as strong as possible. So, looking at the sectors, take their combined total scores. We're only at 14% of the max possible strength. We go do a little investigation. Yeah, right. Biotech negative 81, healthcare negative, energy negative, materials, real estate, silver, utilities, transports, industrials. What looks bullish? Bitcoin, the Big 10. You've got XLY. Well, guess what? XLY is basically Amazon and Tesla. You've got XLC, that's Meta, etc. Right. If you look at the indexes, QQQ with a 116 out of 120, really good, really, really bullish. Look at the drop off on the S&Ps and the QQQ, or from the QQQ to the S&Ps. QQQ in first place with a 116, S&Ps in second place with a 61. Second place is about half the score of first place. Then you get a much bigger drop off. Dow Jones at 21 out of 120. The IWM a 15 out of 120. The RSP, that's your equal weighted index. 500 names from the S&P, they're all equal. That equal basket is only getting a 6 out of 120. We're not in a strong market. Tesla is strong, Broadcom is strong, Apple is strong, Google, Amazon, Microsoft, Meta. Go to ETFDB. And I know y'all know what I'm talking about, but it's good to reinforce. All right, if we look up the SPX or the SPY, well, that's on a company, right? It's a basket of companies. So we look at the holdings, and who actually matters. Well, Apple is about 7%. Nvidia is about 7. Microsoft is 6. Amazon is 4. Meta is 3. Tesla is 3. 1, 2, 3, 4, 5, 6. 7 or 8 names make up a big chunk of the entire S&P 500. What about that QQQ? Q tips, as they call them. Well, Apple's about 9%, Nvidia 8, Microsoft 8, Amazon 5.5, Meta 5, Broadcom 5. These are the only things on the board that actually look good. Which means what? Not a problem until it is a problem. If I'm looking to get long, all right, Meta, not a bad pop there. But if I'm looking to get long today, what's been working? Until things change, where can I call for edge? Well, I'm not trying to call for a bottom in biotech. I don't got to be the first guy to call for a bottom in healthcare, energy, all that crap. It's going to be Bitcoin, big tech, one of those 5 or 10 names. Again, another issue doesn't matter until it matters. All right, we go looking at a few of the names that are working. Do they offer really good swing trade entries? Right here, right now. And we're not having a conversation of can they keep on going higher. That's a different conversation. We're talking about from a probabilities and a risk reward standpoint. We open up a daily chart here for Tesla. Do we want to build a career around that kind of entry? They're going to pop it into 440. We're about 5 or 6 average true range moves above that 21 EMA. Not a conversation of can Tesla keep going higher? Does it have to pull back 100 times in a row? Is that going to be a good entry? And I don't think so, based on my 8 or 9 years of trading. If I can catch Tesla with good structure, buy signals, a perfect score, and then I'm buying those calls, at or near that 21 EMA, yeah, I'm going to do that 100 times in a row. Give me the Apple weekly squeeze on that 21 EMA. I have to buy that. Give me the Netflix weekly squeeze at that 21. I have to buy it. Now I'm looking at Netflix thinking, well, it already broke out. It already fired that squeeze. It already hit the target. We're above the target. I'm not trying to figure out, are we going to $1,000? Are we going back to 800? Probabilities wise, is that the best entry I can get all the way up there? And for me, the answer is no. That implies a couple of things. The most important thing is if I'm waking up today and I am coming in here at 440 and I'm buying those Tesla calls, I can't cry on a pullback down to 400. I can't, I can't get back all my profits. I can't take myself out of business if I'm buying it up here and it pulls back $40. Take it a step further, I could buy it at 440. I could catch an $80 gap down tomorrow. I think Tesla still looks bullish. Right? It's a pullback to support. If I'm the guy buying it back here, I should be buying it in a fashion where I'm saying, all right, if they got to kick it back to 315, 320, I want to buy more. Right? If I like it with a buy signal at 360, why wouldn't I like it with a buy signal at 315? If I like it with buy signals at 440, why wouldn't I like it at 380? Not to say it has to pull back to 380, but that should be the thinking. So yeah, that bad boy right there. To be frank at this point, I think how you trade it is more important than where you trade it. You want to buy it at 440, you want to buy it at 450, you want to wait for a pullback, you want to wait for a 15-minute squeeze. Do your thing. As far as how you size the trade, time to expiration, all the above. Yeah, you can't be in shock and awe if the unthinkable happens and it pulls back to a buy zone. So that one's been very strong. What about an Amazon? Can I buy it at 230? Of course. Should I want to buy more at 220, 215? Definitely. So as far as fresh ideas, there's not too many of them. Let's go look at a Google. Yeah, Google, total nut job. But then look at the weekly chart for Google. It's an interesting dynamic. When I look at the weekly charts, the 3-day time frames, 2-day time frames, I've got a pretty good shopping list. Right, Google, Microsoft, Meta, TSM, Apple. I want to buy the bigger time frames, but when I'm looking at a daily chart or an hourly, it's a little bit like, man, could I get a little dip? Nothing crazy, but just a slight discount. But number one on that shopping list is Google here for sure. And what I would like to nibble on would be, well, here's the thinking. It could be 2 weeks down the road. It could be 3 weeks, 4, 8, 10, 12, 15, until the signal changes. What I'm trying to look for at some point, in the context of a really nice weekly uptrend, they take that weekly squeeze. In above 200, I think it's a path into 220-ish. And if they break it out, right, for now they're all ifs, but if they break it out, if they fire that weekly squeeze, that's not asking for too much. Think of it from an average true range perspective. 200 into 220. It's not a big move for Google off the weekly. Now, if I can buy a 220 call for next week, and then lo and behold, Google's at 220 next week. Yeah, percentage-wise, it'll be a huge return. The preference is, maybe I don't back myself into a corner where I need that breakout this week. Look at the March 220. Now, I would love to buy them on a dip. Right now that March 220, they're going for about 315 to 330 per contract. They pull back Google a little bit. If I can grab them for $2, I can grab them for $1.50. Size to accept the max loss. You kind of set it and forget it. We're not looking at a quarterly time frame or a yearly time frame. We're looking at a weekly. So 95 days for a $20, $30 move. That should be ample time. Here's the key, though. I don't want to buy them on the breakout. I don't want to buy them at 200, 205, 210. I want to buy them now while they're cheap. Here's the power of a squeeze for an options trader. And make sure you really understand this. Between now and March, market makers are pricing in about a $25 move, which means between now and March, they think Google can get into about 215-ish. Now, they might be right, or hear me out here, or they're dead wrong. They're not taking into consideration the squeeze. Google breaks out, triggers the weekly, and we're getting something like a $25, $30 move. That's the power of the squeeze. You find that moment in time, they're building up the energy. You look at momentum, you look at structure, etc. If I can buy that 220 call and they're thinking, hey, we're probably going up about $25. And then into, January, February, March, Google's up 30, 35 or more. You're getting a great double whammy. You're cashing out because of obviously the directional move, but all that premium getting pumped into the calls, on the breakout, on the pump. Everybody wants them. It's a beautiful thing. But if I like that Google chart at 195, I'm gonna like it a lot more at $180. So that's on the shopping list, and then the other one would be Microsoft. To be fair, Google is a lot further along, a little bit stronger, momentum a little bit better. But if If they can turn the MACD, if they can break it out, if they can fire the squeeze, Microsoft should, right? Keyword being should, be a $500 stock. I don't want to buy the calls at 475, 480, 490. I can look at March. Right now, a 500 call for March is going for about $6. Get a flush this week. Maybe you're buying them for, $5, $4, maybe even $3. They're looking for about a $45 move. 500 call is a little bit outside that, so I like that idea as well. Not looking for it to happen this week. Not looking for it to happen in January. Give it 90 to 100 days. Should be enough if they're going to get that move going anytime soon. Google, Microsoft, and then Apple here. Pretty self-explanatory. One of the better-looking weekly charts, I think, in the market. They did get the initial move into that big 250. However, they haven't fired the squeeze yet, so I would think any flush here where price can hold above previous res, or they dump it a bit, but you're above that 237, 238-ish. I want to buy that, and then I want to call for a move above 250 from that pretty weekly squeeze. And then TSM here. With a weekly squeeze, a 3-day squeeze and a 2-day squeeze. The SMH is kind of a tough read right now. Let me pull that up. From one angle, of all the things in the market, big tech, etc., this could be the one that might be setting up for the biggest move. Look at look at XLK, etc. A lot of them have already made their bigger move, and then on the SMH here, for now it's a lot of nothing in a weekly, 3-day, 2-day daily squeeze. Right now it's a lot of nothing, but that's also 4 bigger time frames trying to build up a lot of energy. Could be a January thing, could be a February thing, March, April, etc. At some point, they should fire. First goes that daily squeeze, then the 2-day time frame, then the 3-day. They're eventually going to work up, wake up that weekly. When that day comes, for conversation's sake, they're all firing to the upside. We're calling for a move to and through $300. They break the thing lower. That could be a move down and below $200. I want to lean bullish. A score of 11 out of 15 says we should lean bullish, but a big lack of triggers to want to buy it right now. No weekly buy signal, no daily, no 4-hour, no 2-hour, no hourly. But into 2025, that should be the big one to keep an eye on. Most things have released the energy, they fired their squeezes. The SMH here is doing the opposite. A huge part of that, of course, is going to be NVIDIA. And then if you noticed on the sheet, the almighty sheet, NVIDIA is a little bit of a troublemaker here. The only thing on the Big Ten with a negative score. It's not a negative 120, negative 100, but we don't want any kind of negativity in the great NVIDIA. Now, where would I want to buy it? Back above 140 on a closing basis. Not a cute little pop above, but on a closing basis. And then from there, I've got to get a lot of lower time frame buy signals. We're above that 140, and we have 2-hour, hourly, 30-minute, 15-minute buy signals. Then I want to jump in and buy it. Under that 140, I don't love it right now. Under our 21, under the 50. We got that daily squeeze. No momentum turn to the upside. Under that 140, maybe room for a flush down the 125. I will not short it. I only want to buy it, but I don't got to be the first guy to do that. Point I'm trying to make is, I don't think you're ever getting the SMH into 300 without Nvidia here trying to lead that charge. Now in comparison, Broadcom, of course, looking a lot better. And, a 25% gap will do that for you. TSM, another one I really like, and then I'm gonna call this one my sleeper pick. Be clear, um, I don't think we're doing this for a group trade, but I'll share the idea if I do it. For a sleeper pick, contingent on the SMH not falling apart. Better yet, contingent on into January, February, March, April, etc. You got the SMH. They're taking that multi squeeze. They're trying to get a move higher going. If that can't happen, the idea here is worthless. But for a potential catch up, my thinking would be if we do wake up one morning, whenever it might be, and we have the SMH upwards of $300. Yeah, Nvidia should be at new highs. Broadcom, TSM, and then if anything, AMD here should play a little bit of catch up. Maybe not back to 200, maybe not back to 220, but it's an interesting dynamic on the weekly right now. Looking back from July, August, September, October, now into November, December, we've had a big weekly squeeze. We've had momentum below zero since April, which means April, May, June, July, August, September, October, November. Which means momentum-wise, the Bears have had about 8 or 9 months to try to come in, try to do some damage, and wreak a little havoc. And potentially go as far as take that weekly squeeze, try to break it short. Momentum supports that since April, and yeah, AMD's been ugly. They beat the thing up a little bit, but they're not getting a huge move lower from that weekly squeeze. A cleaner example of that dynamic is Bitcoin. For about 20 weeks in a row, we have momentum below zero. For 20 weeks in a row, the Bears can't do anything with that, right? They can't take out support. They can't break structure. They can't get that squeeze to fire short. Then what usually happens? Momentum turns positive. The Bears had their chance, and then the Bulls take the wheel, and we are moving and a grooving. So for AMD, not as clean as Bitcoin. Again, the key, a really good SMH. If we get that, down the road, you could get that same dynamic. They're back above that 21. They're working back above the 50. Turn the momentum back to the upside. For a lotto idea, the kind of thing I think you put in an account you don't watch every day. If you can get it a little bit closer to that weekly 200 SMA, right? For a lotto trade, I like the idea of a 200 call for June or July expiration. Now, of course, our account sizes all vary. But let me see, 350. So so for my account, etc., I could come in here. I could buy about 50 of the 200 calls for March or July. I'm sorry. Accept the max loss. Move on with life. I'm not going to watch that thing every day. That's going to be about fast forward to end of January. If I'm buying 50 contracts, it's about 17,000 a risk. So if I'm comfortable with that risk, where's the potential in that trade? Well, if I take that trade today and then end of January, nothing absurd, nothing too crazy, but let's say we're working back towards that 160. Well, into the end of January on my 17,000 at risk, if they can pop the old girl back into a buck 60, there's about 35K a profit. If we're rolling into end of April, for example, and we are up here near 200 bucks, there's 80 grand to profit. Again, we all got different account sizes, but the point of being, say it's only one contract. For 350 a risk, you get AMD back into 180, 190, 200 into April, etc. It's a multiple of that risk. Not a clean chart. Not the kind of thing I would buy aggressively. Not the kind of thing I would buy in need of move in my favor quickly. But until things change for me, a really big initial focus into the new year is going to be that multi-squeeze setup, over there on the SMH. And 99% of what I do there will be, rank out the names, take the top 1, 2, or 3 strongest, and then try to allocate all the cash there. But for a back pocket kind of idea, maybe keep an eye on the old AMD. But all right, guys, I've been gabbing for a while here. So any questions, any chart requests, we'll hang out here for a few minutes, and then folks in my room, I will join you over there, and I shall take you through the open. TPS, yeah, that's a good observation. TSM looks, I think, way better than the SMH. And we do want to acknowledge that. For now at least, it's not as if we go through the SMH and everything is just top shelf. AMD's got a negative 15. That does kind of suck, right? You've got SMCI negative 6. You got LRCX with a 0. NVIDIA a 0. Not a great looking group today. Just something trying to build up the energy. Could be a looker, down the road. Evelyn, Micron. Let me fix this problem. Okay, yeah, they have earnings on the 18th, that'll be Wednesday after the close. Just for craps and giggles here. But yeah, they got earnings in a couple of days. All right, so SMH, NVIDIA 23%, TSM 14, Broadcom 8, Micron makes up about 4%. So not a huge piece, but could matter. I think the SMH will take any help it can get. Micron pulls a Broadcom, and it's a $125 stock on Thursday. It ain't gonna hurt, that's for sure. Yeah, where's Broadcom gonna open? Although maybe I shouldn't look. Oh shit. As you grow as a trader, make sure you don't complain about problems you wish you had. That problems you used to wish you would have. Broadcom opening at 232. Had that trade, it would have been a 6-figure profit. Would have crossed that milestone with my first 6-figure trade as well. Percentage wise, you close the trade for 60,000. or you close the trade for 100,000. Yeah, in that moment, the extra 40,000, it does sound like the end all be all. And I'll be the last guy in the world to say, yeah, I don't need the extra 40,000. I got a wife who likes to grocery shop. I'll take the extra 40K. However, percentage wise, that's also like 8 years ago. Me being up $600 and then trying to hold on for another four to make sure I can make $1,000 profit. Yeah, maybe you do catch it. Maybe you do make the extra 300, $400, or maybe Broadcom craps the bed and the $600 profit you were once looking at is a thing of the past. Got to protect that forward progress, and that's what I'll tell myself to sleep okay tonight. Yeah, Roman. Me and Henry were talking about that. I had my Broadcom trade. He had a killer trade on Tesla. We always want to try to get them all alerted. Sometimes easier said than done. All right, guys, few more here. Opening around the corner. Martin, AEHR. Not the kind of name I would want to buy. 21 EMA under the 50 under the 200, negative 11. Weekly squeeze. So I wouldn't want to buy it. But you'll also notice being short when daily momentum crosses back above zero, usually not a great time. Yeah. So do I want to get short back here? Eh. All right, it might not be the most bullish chart I've seen, but that momentum kick, that might get a pop going. If I'm short, I want that. I want that momentum wind at my back. I can't buy it, but with that MACD getting back above zero, I don't think I want to short it either. So not too much at the moment on that one. Yeah, thanks for all the kind words, guys. I appreciate it. It is one of the better parts about trading, I think. One comparison I always draw is the gym. Actually, just this weekend, I hit a brand new bench press PR, and you've got that 15 seconds of euphoria after you hit the PR. But to me, what's more exciting is, looking back when I was 18, what was I bench pressing then? It's that incremental progress you make over the course of 3, 4, 5, 10, 15 years, just by showing up every day. That is the fun part. But all right, y'all, I got to jump into to my room here, so I'm gonna let you go. I will be back with you, same time, same channel on Wednesday. I'll try to leave a little more time for Q&A then. But yeah, I hope you've all had a good end of year. Try to finish strong, and again, major observations. The market might not be as bullish as it appears. We've got 4 or 5 names doing a lot of the heavy lifting, or maybe all of the heavy lifting. If they keep on doing that, not an issue. We keep on jumping in, keep on making money there. We find ourselves in a spot where now Tesla's pulling back a bit. You get the Microsofts, the Metas, and Googles, the Apples coming in. If we don't get really good rotation, they're selling Amazon and they're buying the crap out of energy, transports, etc. If they sell leadership and we don't get rotation, then that combination usually points towards you're going to get a decent market-wide pullback. If that pullback isn't the end of the world, I think it makes for a great buying opportunity. But all right, y'all have a great day. Thank you again, and I'll catch you again on Wednesday. Adios.